There's so many different ways of trading, and a lot of us actually occupy all the different types of trading within our trading strategy. And actually we need to learn how to, one, define all of those trading strategies, and also spot the ones that we're doing, the ones that fit in with our life, and the ones that will ultimately bring us the most wealth. And when it comes to owning a ledger and taking crypto off the blockchain and offline, there's only really one type of trading strategy that makes sense to get a ledger for. And that's what we're going to go over in this video. Now, if you like all things crypto and finance and personal finance, all of that stuff, and how to build wealth for you and your family, then please consider subscribing to the channel and certainly hitting like if you get value, because every time you click like, the video is shown to more people and more people might get value. First of all, we have to define the different types of trading. So I'm going to go over them here. The first one is scalping. This type of trader uses the 15-second all the way up to the 1-minute chart. This is movements in the price in seconds. These traders will be using the crypto charts and noticing slight patterns and gambling basically on these movements of the price. Scalping is the ultimate, most risky way to trade crypto. And when it comes to using a ledger, you wouldn't use your ledger for this. Next up is day trading. And day trading is one you've probably all heard of from Wolf of Wall Street or anything financial really. Day trading is like the buzzword that everyone uses. But to be a day trader, you're using kind of the 1 hour, 2 hour, 3 hour, 4 hour charts, and you're never keeping a trade open overnight. So any trades that you do that day will be closed that day. And again, you're not going to need a ledger for that type of trading. Next up is swing trading. Now, swing trading for me, I thought was my identity. You know, I am a swing trader. I like to put in a trade 1 week, let it roll out for 2 weeks, maybe a month, and see where it's ended up, and then maybe close that trade. That's how a swing trader looks at things. They look at the daily chart and try to see patterns over the course of a week. For example, in another video, I'm actually using the moon phases as a way to signal to me when I should be buying or selling. And that is swing trading basically, because my trade's only going to be open for 2 weeks at a time, because that's how long a moon phase is, and then I'll be closing it at the end of that moon phase. And while this is maybe more suited to a ledger, still you can swing trade on Binance and Coinbase and stuff, not necessarily needing to take the crypto offline. And then finally, we've got position trading. And these are the people who like to accumulate coins over time. You know, they look at the fundamentals of Ethereum and they say, I really like Ethereum, I'm going to buy that, and I'm going to wait on it for the next 10 years and see what happens. Now, for these people, a ledger is useful. So I know that you're probably looking at all those different trading styles and you've assigned one to yourself, maybe a few. I mean, personally, I've probably assigned all of those to me at one point. But assigning all the profiles to yourself is not useful for the accumulation of coins over time. The more risky it gets, the more highly skilled you have to be in that area. So unless you're an expert chart reader, I'd probably say scalping and day trading is probably not for you. But I've actually got a controversial opinion here on all of this. I think maybe you should practice scalping or day trading or swing trading. But the point I want to get across here is that I actually think you should distribute your portfolio over these different types of trading styles. I think as we're in a bull market, as the prices are all going up, I think swing trading is probably the ideal place to be. But being a position trader also at these times is something you need to keep in mind, because as we reach the peak of this market, the prices are all going to crash afterwards. And when they crash, they're going to hit their bottom. At this bottom of the market, that is when the position traders are going to come in and do their thing. You could make an argument to say that position traders just buy any time and just hold it for the next 10 years. But the really, really smart position traders are buying at the bottom of the market and selling at the top of the cycle in 2 cycles time. And for these people, buying a ledger would be extremely valuable, because these people understand that the value of their coins is going to go up exponentially over time. And so paying the $120 that it costs to buy a ledger is actually a very small cost to secure all of your assets. Now, I actually did this in another video where I calculated what your crypto portfolio value would be in 2 cycles time. So if you're kind of in between buying a ledger or not, and you want to know how much your portfolio would be worth in 2 years time as a rough estimate, go over there and check it out. You've got to think of a ledger like a bar of gold. You wouldn't go and order a bar of gold, have it shipped over to you. This heavy bar of gold, you wouldn't just go and get rid of it straight away. You wouldn't scalp trade a bar of gold. You wouldn't swing trade a bar of gold. You have that bar of gold to store it physically and keep it safe. That's kind of your hedge against inflation, your asset that will grow over time in value. As gold becomes more scarce, that thing will increase in value over time, and you store it somewhere safe, right? In a bank vault, for example. And a ledger is exactly the same thing, but in crypto. So it just wouldn't make sense to buy a crypto to swing trade or to scalp. It wouldn't just wouldn't make sense. So if you are someone who wants to accumulate coins over the course of the next 2 cycles, wait for the bottom of the market, buy your coins then. Like for me, for example, I want to buy a Bitcoin, maybe 2, maybe 3, who knows, at the bottom of the next market. Those Bitcoin will go straight into my ledger and stay there until maybe Bitcoin reaches $1 million one day. Think of it as like your retirement fund. All the stuff you do in swing trading or day trading, if you ever went there, would be to kind of pay your lifestyle now, maybe get rich quick. That's how that would work. But to kind of guarantee a retirement fund, the ledger is where that crypto goes. Now, like I said earlier, you are supposed to allocate a certain percentage of your complete asset total into a position trade, so into your ledger. So you might want to keep a Bitcoin in your ledger and you keep that there forever. That ledger might take up 5% of your total portfolio value, could be higher. It all depends on your risk tolerance. Perhaps if you've come from the traditional stock market, maybe a higher percentage allocation of your portfolio would be in a coin that you really believe in, say Ethereum or Bitcoin as a store of value. And you might just play around with swing trading. The whole point of this video was for you to understand what kind of trader you are. And if you are a position trader, then a ledger might be just the way for you to kind of secure those assets and that percentage of your portfolio securely and offline. If you did end up wanting a ledger, there's a link in the description below. If you did end up buying, I would get a kickback, and I would really appreciate that if you're going to buy it anyway, of course. And I would greatly appreciate it, and you could think of it as supporting a very, very, very small creator. This is a series of 4 ledger videos, so click here to see the rest of the videos, or click here to see all of my chart analysis and see what's going on in the world of crypto every day. Bye!